Good morning. Kenneth and I are honored to be with you today and to introduce you to the Recovery Acceleration Fund, a scalable, viable, and transformational housing affordability breakthrough. At its core, RAF is a bridge loan that gets families impacted by disaster home at least 2 years sooner than they would if they had to wait for the federal recovery dollars. If we are fortunate enough to win this prize, we're going to launch RAF for hundreds of families in Florida and then take the lessons learned, share it with others, hopefully some in this room, and scale RAF across the country. We believe that one of the most efficient ways to support affordable housing is to keep families with lower incomes in the homes that they already own, and we hope after hearing us today, you'll agree.
Before we start talking about the problem, I want you to draw your attention to the photo on the screen. One family that would have greatly benefited from RAF is the Colon family, a family of 4. 6 years ago, their home was destroyed by Hurricane Harvey. And because of a super tight post-disaster rental market, they were unable to find decent, affordable rental housing. Because of that, they were forced to move 21 times in 6 years. And one of the family members had to stay in that tent for almost a year, rain or shine, just to keep an eye on the house. They applied to the city's rebuilding program and waited 5 years just to be told that their case had been dropped due to an administrative error. Now, in November, after 6 years of waiting, they finally get to move home. If it had not been for philanthropic dollars, that family would still be suffering. This horror show does not have to happen for them. It could have been avoided by them and so many others just like them, and will be avoided by tens of thousands once RAF is scaled.
The current model of post-disaster recovery doesn't work. It leads to inequitable results. Once stable families who own their own homes are pushed off the financial cliff. And as you can see, there's this perverse correlation between the amount of federal dollars that hit the ground and an increase in net worth for white people and a decrease in net worth for people of color. And that's all tied to access. Compounding this pressure on affordable housing is the fact that disasters are one of the greatest threats to existing affordable housing. Climate change is making it worse. Each year, over 500,000 homes are at risk of being impacted, and half of those are owned by families of lower income. Let's zoom in to Houston, where we're 6+ years after Harvey. In Houston, they were fortunate enough to have a reimbursement pathway. And that worked for 488 families who were able to self-fund. But for the families who didn't have enough money to fund their own construction, they had to wait for the federal recovery program that to this day in Houston has only gotten to 71 families. The truth is that reimbursement works, and RAF is going to make it available to more people.
I'll tell you another quick story, a story of a homeowner whose journey was the complete opposite of the Colon family. Here you see Miss Elsie Lewis at her welcome home party. Miss Elsie is an 86-year-old woman who truly is one of the sweetest people I know. After Hurricane Ida, we were able to pilot RAF in Louisiana, and Miss Elsie was one of the first out of 20 clients who we welcomed home. Through RAF, we were able to fund construction on her home and complete it within 18 months after the storm. Here's the other thing, is that SBP was reimbursed before any other federal funding homes were ever started. Without RAF, Miss Elsie would still be waiting. And at 86 years old, could we really ask her to wait 6 years like the Colon family had to?
At its core, RAF is a bridge loan that makes construction loans to families who are eventually going to qualify for the federal recovery dollars. They move home, and after they're home, once the federal dollars have finally landed, they file for reimbursement, and the fund is repaid. So how is this a housing affordability breakthrough? As we shared earlier, we believe one of the most efficient ways to support affordable housing is to keep lower-income families in the homes that they own. The Colons are not anomalous. There are millions of families who can afford to stay in their specific homes. They can't afford market rate rent. They couldn't afford to replace their homes. If they lose their homes, they're forced into either substandard housing or subsidized housing, taxing an already overburdened system. And further, as we know, equity in a home is one of the greatest sources of wealth for most Americans. Rebuilding fast preserves that wealth for generations to come.
RAF will transform the way families experience disaster recovery. If all of you can with me, just imagine your own homes being destroyed by a storm or any other type of disaster. This timeline shows your traditional way. If you're a family with means, you're able to rebuild your home within months, that green line. Whereas the blue line says that if you are a family without means, you have to wait until federal funding comes available. You see that at the 2-year mark, federal funding may become available, but just because it becomes available does not mean city and states will implement their rebuilding programs right away. So what does that mean for you? That means you are forced to pay rent for possibly years while you wait. Because of RAF, we were able to get Miss Elsie home within months, whereas the Colin family is still waiting. With RAF in place, we can have more people home just like Miss Elsie and start recovery within months rather than years. So why work with SBP? Mark Morial said this quote, and I'll summarize it for you. He said, SBP can mobilize resources and partnerships to implement solutions that benefit marginalized communities. Since 2006, we have rebuilt over 6,000 homes. And this year alone, we're going to preserve over $50 million in home equity for our clients. This work is life-changing, and we're super proud of the impact that we've had. But we know that there's so many families whose homes are still at risk.
At SBP, our ethos is what we call constructive discontent, and it's based on Frederick Douglass's notion of where there is no progress, there is no struggle. In this industry, there has to be progress, so we have to be willing to struggle. We were passionately discontent to come to learn that there was a pathway that worked for some, reimbursement, but it didn't work for others, and RAF had to come to be. Further, we have this notion of yokoten, which roughly means if you do it well, share it. SBP doesn't just believe that we should support people who are in our line. We serve, and we should serve, the pool of clients who are at risk of being pushed beyond their breaking point. That's why we're committed to working with others, to proving it up, and to scaling RAF. And it's needed because right now in Florida, there are tens and thousands of families who are at risk of being pushed beyond their breaking point. They have no clear path home. And to truly honor the Colins and the other families who have suffered, we can't let them endure the delays and pain that the Colins have suffered. These families in Florida, they deserve RAF because RAF is viable. We proved it worked in Louisiana by getting 20 families home. It's transformative. It takes a model that works for those with means and it expands access to those who can't self-fund. And it levels the playing field for families of color who have been thrust into a system that has long driven inequitable results. Finally, RAF is scalable. Climate change is increasing the number of communities that need RAF, but the beauty of RAF is it requires no regulatory change at all. We're proving it up. We'll have the results. We'll share it with other partners, and the market will take over. This is the pathway to disaster recovery in America.
Above all, RAF is a housing affordability breakthrough. Why? By keeping people in the homes they already own and reducing the burden on affordable rental market, we are giving new life to what it means to preserve affordable housing. The system that was meant to help people has left our most vulnerable families waiting, breaking, and suffering. We believe that low-income families deserve the same access that affluent families do. We believe in doing everything we can to reduce the burden of housing crisis. Yesterday, we heard Reverend Bauer say, let's have sorrow for things left undone. Together, this does not have to be left undone. Thank you.
Thank you. We're going to go to Marty for our first question.
Great. Thank you very much, and congratulations on being finalists. 2 questions for you. The first is, does SBP have a more direct role in the construction and repair? And if so, what does that look like?
We supervise the construction and repair, and that's a vital piece to make sure that the work is done well, on time, according to scope. And syncing up the scope of the work with the required methodology of reimbursement is really the key, and it's something we kind of perfected in Louisiana by getting it right there. I'm sorry, I'm going off script here, but we started earlier in Florida by socializing the concept. So they're in parallel building the standards based on some lessons that we learned. We'll understand the standards and we can sync them up.
Great. Yeah, thank you. The second question, thinking about scalability, can you talk a little bit about your organizational capacity and your current capacity and thoughts about growth to take this to a larger scale?
This is the biggest priority that we have. Plain and simple. It will revolutionize post-disaster recovery in America. And so we're staffing it aggressively. It has buy-in from the top leadership. We've built some extra capacity on the finance team. We have a group of advisors who have done this sort of finance in the past. On the implementation team, I don't want to say we're overstaffing, but we're fulsomely staffing, if that makes sense at all. We're transplanting the team that was successful in Louisiana. We're embedding them in Florida, and we're bolstering from there.
Thank you.
Yes, sir.
Chuck or Judy? Chuck and then Judy.
So thank you for the opportunity to review. Can you talk a little bit about whether there's risk between the RAF extension and exposure and what's actually recovered through FEMA? Has there been an issue of gaps in not having the funding that was expected from the federal reimbursement to cover the amount extended through the lending process?
Yes, sir. And so just taking a quick step back, these are HUD CDBG DR funds, and there's specific rules on how those can be used. The states or the entitlement communities make those rules. When this gentleman was asking a question, I kind of did a little hand show. There's criteria for construction. There's certain standards for the builders in the room. They key in certain exactimate criteria, which is an estimating capacity. We know what that criteria is, so we sync it up very precisely with the scope of work. We've done 20 loans in Louisiana. They're all successful. There is risk, to be sure, but what there also is, and it could actually be fatter in Florida from what we understand, but there's generally 10% profit, 10% overhead, and that built in enough of a cushion for any risk. And then I'm sorry if I'm overdoing it here, but because of the way we procure, we're actually building it for less than the estimated cost, but they pay on the exactimate rather than they pay on the actual cost. Yes, sir.
Judy.
I have a number of different questions. First of all, what is the interest rate that you're charging the borrowers? What's the term? What's the collateral? Because you could get the reimbursement from FEMA anywhere from 2 to 10 years was what that graphic showed. So that's the first part of my question.
3 different answers.
Yep.
First of all, and for those of you wondering why would you charge interest, you have to based on the HUD regulations. If it's a grant or if it's a below market loan, it's seen as a duplication of benefits and it scotches the deal. So whatever the lowest permissible rate, like whatever there's a technical term for it, but whatever that lowest permissible, I'm sorry, I don't know it offhand, that's what we charge. Second of all,
is there a number to what you were charging those first 20 folks?
I think it's just under 4% because it was locked in before things got haywire.
Yeah.
Second, it's not collateralized at all. That's kind of the beauty here. We're taking people who are considered that offensive term unbankable, and we're using the loan loss reserve to secure funds based on what's close to a government-backed security. Third, It's a 3-year balloon payment that can be extended. However, what's important here, and I can go back to the graph if you want. So if you think of that timeline, once the program launches, that timeline is for people generally who apply to the program, and it gets to them when they get to them. The nice thing about reimbursement is they're delivered a packet, right? And so it goes a heck of a lot quicker. And what we've come to understand is, and we certainly heard this from the team and the government team in Florida, they want to put points on the board, so they prioritize reimbursement. This is a house that's done. And if they process the application, write the check, for good or for bad, they can say we did well. Did that answer your 3 questions?
That was one question with 3 parts. Are there others that have questions? You can come
I'm
back
sorry
to me.
about that.
No, I have more questions.
No, I was
but
apologizing for taking too long.
Oh, no, that's great.
Go ahead.
So the first part of the pilot that you've originally done in New Orleans, it's 22 people. What was the total dimension of need? I mean, it's a pretty small amount relative to how much you want to scale. So how was that sized? Who might you not have been able to serve? What's the composition of folks that you did serve?
Let's hear from Kenneth for a while. I'm going on too much. You want to talk about who we served and the composition, and then we didn't get anywhere near to who we needed to get to, right? Scale was a heck of a lot bigger but this was a sizable pilot that we thought would give us the data. Who did we serve?
Yeah, so 100% of our clients were over the age of 62, right? Majority of them, 90%, were people of color, and 100% of them were low-income families, so they had an AMI of about 80 or so. So that's the makeup of who we served in that cohort.
So your ask of 1.6 million in lending capital, what are you going to do with it? Is it going to revolve? How many times are you going to put it out over the course of the 3 years?
Yes, so it should turn 3 times, we think. It is being lent out. Depending on the mix of philanthropic versus investment capital, it will be lent out directly, or it will serve as the 20% loan loss reserve. And that's where getting to scale, we're kind of figuring it out. This is going to get to a couple hundred families. So we thought that 20 was a good number to test and learn from. It was meaty enough that we'd make some mistakes or learn, and it wouldn't be easy. In a couple hundred. So in Florida right now, through a government program, we've already, in less than a year, built 110 homes with philanthropic funding. So this feels synced up at a capacity that we can handle.
Benji?
I am not in financing. I'm an architect, but I understand this. It seems quite simple. How come it hasn't been done before?
I'm a lawyer, so I don't understand the math. I'm glad you do.
Good, and I'm asking that because it sounds like there's a lot of fat.
There's a ton of fat, man.
So why has that not been capitalized
The markets.
on yet?
So I'll tell you, I think there's a couple of reasons right now. The traditional disaster recovery model benefits the big actors. They're making money as is. There's no reason to disrupt it. And SBP is this blend of a group that's national, so we've seen it again and again and again. Like our operating model is our direct service work. We work for people. That tells us what's not working, and that informs and drives and requires the scaled impact work. We're disrupting the system, but our confidence in getting to scale is frankly, once we prove this, we're going to get pushed out of the way and the market's going to take over. There's a ton of fat.
Crystal, go ahead.
So when you are renovating, building the new house, are you putting in real sustainability features to that, or you can't do that because of the reimbursement only covers certain things? And then I want to know also, how does insurance play into this?
Do you want to answer, or would you like me to? All right, a couple things. Insurance actually gets better. Anytime we touch a roof, we build the roof to a fortified standard. In our work with Florida, through this current program, we got them to change what's required, and they now require fortified roof for all roofs. That lowers insurance premiums. And it's something that through other work we did in Louisiana, like we're the theory, we're the vanguard, we show it works, it takes off. We are building in resilience in building to the fortified standard as much as possible that fits within the scope. We'll do work that's not required, but that is reimbursable. There's also, because we're a nonprofit group, we throw in some philanthropic dollars for other needs of the clients simply because it's mission aligned and it's the right thing to do. I talked to you about two of our values, constructive discontent and Yokoten. The other trinity, if you would, is the mom rule. And we treat our clients the way we'd want our own mothers to be treated. Thank you.
Marty?
If you're successful with Affordable Housing Breakthrough Challenge Award, can you talk to us a little more about your timeline and how you hope to scale up and go bigger with the RAF?
So we're going to get to the first client in November. Have to. I'll be candid, without your funds, we're going to launch, but not at the scale that's needed. And not as much as the money is important, not with the partnership from enterprise and the expertise from Wells Fargo. And that's what's really important here. Remember, this Yokoten notion is like our DNA. It's how we exist. We don't just work for the people in our line. We have to make this work. And that's where the benefit of enterprise and Wells Fargo come in.
Thank you.
Thank you.
Great. Any other questions from our judges? All right. Well, thank you very much.